What's going on, everyone? Welcome to today's class. Today, before I get into the Elliott waves, I want to kind of take advantage to answer any questions or concerns from previous classes, maybe any confusion, so we can kind of briefly go over it. I know it's been a lot of information for you guys, so I want to take advantage of this time now. If anyone does have a question or anything, please don't hesitate to ask. Let me see. I go through this every class. Can you guys hear me now?
Yep.
Yo.
Let me make sure. Can everyone hear me now?
Yeah, right.
Perfect. All right, so anyone have any questions, concerns from the previous classes that they may want to go over? Take advantage now.
Prepare, I just put a message on
the analysis of maritime friends. All right, perfect. So remember, let's go back to what we were going over, the 3 steps, right? So here, let me add this to this slide here. Monthly, daily. So remember, when looking at the time frames, I want you guys focusing on, in the higher time frames, I want you just simply focusing on the trend of the market. I don't want you guys worrying about, the triangles or none of that. Well, if it helps you determine the trend of the market, then apply these. I want you to focus on just simply looking for which direction the market can possibly head towards. And as I spoke to you guys about earlier, is that I want you guys simply focusing on this, because in the end, all we're doing is just tying everything together. We're just simply looking for the moment where the market is going, so we can understand the overall trend, so we can understand when we're looking at the smaller time frames, we can attack it the proper way. All right, so let's go to the monthly here. A lot of you guys may have confusion with this, but I just want to look for my support within the market and resistance within the zones where the price seems to be going up and down in the long term, in the longer time frames. All right, when we're looking at the weekly, I want you guys to look at even further into the trend of that zone. So if I see here that every time the market kind of hits here and here, that the market tends to respect the heavenly. So here I got 4 zones drawn out within overall one big zone. So there's 1, there's 2, there's 3. And if we want, we can use either one up here or below it. Since the market is showing it's on a downtrend, or the market is going down based off of price, that's all we want to look for. You can literally move this up if you want. However it helps you make clarity of what the market is doing. So here we have 4 lines within the whole big support and resistance, right? And we're going to go to the daily. And again, we're just simply looking for what the market is doing. Now I can see here, price did what? It built up pressure, it accumulated here, right? Broke out this resistance, came up to this resistance, retested it, failed to continue go higher and came back in, right? And then it started forming a downtrend or a descending channel. And as we can see here, you know, the market has broken out of it a bit, but it would always come back in, break out, come back in. And here it would respect heavily, failed to break. And now we're looking at the possibility that this can either retest to continue going down or come back into the zone, right? And if it helps you, draw a line below it to see the smaller channel that it's building. So here, we've gained clarity within the large time frames what the market is possibly doing, right? We're focusing on this downtrend. And yes, we're focusing on the overall picture within the 3 time frames that we've looked at. But I feel like I've got enough idea. I have a clear idea of where this market is going. You understand? My prediction is if it fails to come back up and touch this line, then we're looking for it to continue breaking, right? So that's all we need to focus on. So then we're going to go to the 4-hour chart, and we're going to see that it's been respecting the same lines we've drawn out. So just to kind of erase this line here, or you know what? Let's keep that line. But let's just make it, let's make it a dotted line. So we can see. Let's change the color to blue. So now I know that the market can either come back here, right? And worst case scenario, here we're looking for the market to retrace, right? Retrace, and we're looking for either an opportunity to sell or buy. But if the market does this, we now know that it's coming here and that this may be the better entry if we're looking for a better sale. So now we have the idea already of what we may want to see. So now this is where you just go into the smaller time frames looking for clarity within this idea that we have developed. So if we start drawing out our trend lines, and looking at it, 90% of the time you won't need to, because guess what? We have this one already drawn out. So that's why I was teaching you guys the Fibonacci's, because of the fact that all these lines can get cluttered within the smaller time frames. So if I focus on the trend right here, right, I can notice 2 things. I can either notice that the market is already developing a downtrend here. We'll turn this red, and potentially completing a channel. I need more clarification to confirm this. So if I go ahead and continue looking at what the market is showing me, right? How many times do we need for the trend to touch, the market to touch a trend to confirm it? Who can answer that?
4 times.
No, we look for 3 touches,
3, sorry.
touches to confirm a trend. No, four touches is where we're looking for breakout. 3 touches is where we're looking. That's where we have our confirmation, right? So far, it's possible that this market right here can break back in, right, and retest. And if we look at it, right now we have 1, 2, and if this is the 3rd confirmation of this trend right here, the support area of this descending channel, then we already know to look for either it to retrace back to touch this line up here again, or for it to retest this line and come back down, right? So you guys are with me?
You're right.
All right, perfect. So now that we have all that in mind, right, let's start looking at the smaller time frames, right? We're going to look at the smaller time frames, the 30-minute, to have a better idea of what the market is doing. So now I can see already that the market kind of formed right here an inverted head and shoulders. That explains why the market has gone up, right? And then we can also spot that it's testing that support area, which is already drawn right here. Let me change this. We can see that it's already testing that support, that resistance area, excuse me. And we can already understand that for this to continue going up, it needs to break out and retest. You guys remember that? Roberto, you with me? You understand where I'm going? All right, cool. So then, we're going to go ahead and start looking for our entry points. So here's where we look at the smaller time frames, the 15, the 5, and the 1 minute to understand where we can possibly enter. So if we were to look to sell this, right, we would want to enter the sell on the resistance area, right? If we wanted to buy this, we would want to buy at support. So if it breaks out and retests, right, and does not continue to come back into the zone here that we're looking at, then we already know that there is a possible entry for a buy to catch this next wave. And then obviously, drawing out your support and resistance, you start understanding the areas that trade, if you were to decide to enter, where those possible areas this trade can either show you better entries, more entries, or possible retracement areas. So if I'm looking at this trade, I can understand that if I'm buying this, this is what I'm looking for. This is the confirmation I need. I need this to continue retesting every resistance it breaks to confirm the direction of that market. You understand? So here we're looking at that. We're looking at this opportunity here. Now, obviously, that's just an assumption based off of price, right? So if we go ahead and apply the basics from what we learned, if I wanted to enter this trade on a buy, I am going to wait for the retest so I can buy at my support area and catch this wave. And then every time it retests, as long as it does not break out and come back down, I now know that I have another possible entry to attack this same trade that I originally had planned, right? So if that's the case here, we're looking at the possibility that this can either go up to then start doing the same exact thing, going down if opportunity presents itself. And then you start understanding and developing the idea where the market is heading and what it's doing. You guys are with me? So not only have we developed a plan to attack this going up, if it shows that, we've also developed a plan going down as long as the market shows us that. You guys are with me?
Yeah. Yeah.
Yeah, right.
Yeah, brother.
So everyone has a clear understanding of how to use the higher time frames to the lower time frames. All right, perfect. Yep. All right, perfect. So obviously, as we start going into the lower time frames, and that's where we start looking for better entries. It's only clear because the smaller time frames give us more data confirming the direction that we want the market to go. So if it retests is here and then it starts going, if we start looking at if we go back in time and simply just go off of what the market was doing, we now know also in the smaller time frame, if you wanted to scalp this, if you wanted to attack the short term, now I know that as well, that this trade has a lot of more barriers in the smaller time frames to break through this. So this is why I've told you guys that, drawing all these lines at times can get very cluttering. So, that's why I went ahead and taught you guys the Fibonacci's to teach you that if I'm going to go ahead and look at a chart, let's go back to the 4 hour, let's say, and I can say to myself, all right, this trade in the past, while using my Fibonacci, I know that the main points of area where this trade had retracement was in these key zones that I taught you guys, 78.6, 50% line, 38.2 line. So here, when looking at this trade, I already know that the market has reached that 38.2 line. So if it breaks past this, right? Or if it doesn't, now I know that this can possibly go down, all the way down, eventually to here. Now, obviously, there's more obstacles, you know, going off of what we learned using the support and resistance. There's a lot more obstacles that this trade would need to continue going down. So here, we've already made the assumption that the market is on a downtrend or on a descending channel. So if it continues this channel, right? If I go ahead and draw my trend line, I know two things are possible. The market can do this, right? Or if I draw my overall channel here, I know that if she does break back in, this may be the attack. So I'm just showing you guys in terms of the possibilities that the market is showing. Now it's up to us to gather all the information the market is giving us based off of price to make a better decision to attack this. You understand? So not only did we look at it going up, but it's a possibility that this trade can come, take out, and respect the same channel while going down. And then what happens if it hits here? Maybe it's going to come up here and start doing this again. Is everyone understanding me? And what happens?
You got it.
Here's
Yep.
now you can see how the market starts behaving, and you guys can all start attacking it different ways. So that's what I'm trying to teach you guys, how to use this. Go ahead and make a better decision. Now, with what I'm going to teach you guys today is how to use the Elliott wave to determine entry points, you know, within these channels, and you know, different types of shapes. And you know, for you guys who like trading shapes and all that, I want you guys learning this, because at the end, remember what I said was, with everything I'm teaching you guys, I'm teaching you guys how to defend yourself in a war without having to just depend on one weapon. You understand? If one weapon fails, at least you have 3, 4, 5 other ways to attack this trade and still, in the end, get the result you want. You know? So here, I want you guys to I want to once again ask you guys, if you guys have any questions, don't hesitate to ask, because it's very important we're all on the same page for us to continue to the next lesson. So please, everyone, say yes, no, maybe so.
That's good.
Oh, good, bro.
Right.
Sweet, all good.
3 days, bro.
All right, Roberto, what are you not understanding so far? I want to make sure that I clarify this with you, Roberto. unmute him. Roberto, can you hear me? Hey, Roberto, I just unmuted you.
He just messaged you. Well, he doesn't have a mic.
Oh, don't have a mic. All right. So why don't we do this? Why don't you take this time, as opposed to, you know, joining us in this lesson here, take some time, watch the first webinar, and I'll upload this webinar to the next one. Catch up with those webinars, and then we'll do a one-on-one tomorrow. So like that, we can clarify whatever confusion you have. So like that, we can continue. And also I'll be able to dedicate more, you know, one-on-one time with you. All right, perfect. So I'll see you tomorrow, right? All right, guys. So going to what we've all recognized today. So I want you guys to start looking at all the opportunities that the market presents us. And you know, the market presents us unlimited amounts of opportunity. So if we go back to the monthly, right? We've understood that the market was currently in a downtrend, and it broke out of that channel, and it seems to be retesting it, right? So here we notice that the market starts moving in zigzags while looking at, you know, when you're looking at the market, you notice that when it's in a channel, it starts moving in a zigzag, right? So here with the Elliott wave, what you guys are going to learn is, you know, that it's actually giving you guys some data to attack this wave, this channel trend that's going on in a specific way. So with what we're going to learn today, we're going to learn the difference between a corrective and an impulse wave. All right. And basically, you know, the Elliott waves, a gentleman a while back, he winded up going, you know, he winded up studying the charts, and he understood that the charts moved in certain patterns. You understand? He understood that the market kind of repeated itself within its trend. You know, he understood that everything within the market always repeated itself at the end of the day. And just like I'm repeating myself, the market repeats itself. So this guy, he took like 75 years, if I'm not mistaken, of data, and he discovered that, you know, the market operates with zigzag methods, right? So here you would notice that the market would do this. Here, let me move this. So the market would move in this pattern, be it in a triangle. You know, it always does this. And then in the end, depending on the last touch, it would either break out or break out this way, right? And you can also notice that it does it on a flat surface, on a trend, you know, on a, you know, as we learned the three different trends. You have a horizontal, you have a descending trend and channel, and an ascending trend and channel, right? And we all notice that the candles always move in these manners. So when looking at that, you know, he learned to apply a certain number or a certain letter to determine the path that it was taking. And he explained that the upward and downward swings in price was basically judged by the psychological movement of the market within, you know, people either buying or selling. Now, in the end, as it keeps repeating these patterns in different directions, he understood that if we came up with an idea and, you know, kind of named it into something, you know, he winded up calling it, you know, the Elliott wave. And that's why, you know, he winded up learning the objective and the way to come up with a plan to how to attack these waves within the market and understanding what each wave means. So I want you guys to focus on this. And if you have any confusion, feel free to stop me. You know, I want to make sure, because it can get a little confusing, but at the end of the day, it is very simple. So here I want you guys learning what an impulse wave is. So an impulse wave is basically we're looking at the channel of the market, or in other case, the trends, right? We've learned that when we're looking for a trend, we're looking for the support, right? And in this case, hold on, let me fix this. I got OCD. So within the trend, we notice that the market kind of touches, and in the end, we know that the trend does not last forever. It will break out, but then eventually down the road, the market kind of respects that trend in the end. You guys are with me?
Yeah,
Right.
yeah, bro.
Yep.
Perfect. So as we notice as well, is in both trends that the market, you know, the same thing that is happening on the uptrend, it's happening on the downtrend. And if you guys can kind of put two and two together, you guys can already see that the numbers have some sort of meaning towards the point of, or the amount of times it touches the market. Excuse me. So we can see already here that the market is touching it, right? And we can already make a decision like, all right, cool. So here I know that the market in the end would touch the trend, right? It confirmed this trend how many times? So here's one touch, here's two touches, and here's three touches, right? That's confirming the uptrend. And it also continues to make what? Higher high points. Same thing goes here within this place. It makes a higher low point, but in this case, 0, 2, and 4 represent the touches it touches, that the times the market touches that resistance area. You guys are with me? And then the 1, 3, and 5 we can understand. So if we're looking at the market and we see this, we say to ourselves, okay, I kind of have an idea that 2 and 4 would be my entries. If I wanted to kind of like buy this in the short term, I would know that 2 and 4 would be my buy entries, right? And 1, 3, and 5 would be where people either start taking profit or they re-enter the trade. You guys see that?
Yeah, bro.
So here, I want you guys to understand. Let's see who wrote something. So here, this is simple. This is simple logic here. So if the market is on a downtrend and I expect it to break out, my areas to enter this trade would be either 1, 3, and 5. But in the end, I don't want to enter the trade on the number 1 and catch all this movement, you know, and I'm just kind of like stuck in the trade if I'm in a short-term trade. Now, if I'm looking at this long-term, I understand what? That the market is going to go ahead, touch, right? And as long as I see that this second touch within the market is hitting it, now I know that if it retraces, I have another entry to enter this trade. Same thing goes for here. So here the market comes, it touches. I now know I have another entry as long as it doesn't break out. So what I want you guys to understand is what each wave means. So to kind of like break it down to you by the number, I want you guys to understand this. Wave number 1 is the initial move towards the direction of the trade. This is when very few traders think the market would either go up or down, and they'll either start buying or selling, causing the price to either rise or fall. You guys see what I'm saying? So this is the first wave here. All right, first wave goes up, price goes up because people are buying, right? And then what happens on number 2? People either go ahead and start taking profit, causing the price to drop a little bit, right? And then some people are actually still holding their trade, so that's why price respects this trend line, and then it goes on number 3. Now, number 3, obviously in my diagram is not well represented, but number 3 is usually the strongest push up or down. Usually we know that the third line or the third wave is the strongest one. So let me actually fix this while I'm speaking, but you know, we're looking for this strong wave up to confirm that more people are buying the price, right? More people are buying this price, and causing price to go up. You guys are with me?
Yo.
And who can guess what number 4 is? Number 4 is basically the same thing as number 2. People were respecting it. They were either taking their profit or they were simply exiting the trade. You understand? Or holding their trades and re-entering the trade, causing price to do what? Go back up, causing the 5th wave. And this is usually when the market reaches its highest point. So if we're looking at a chart here, right? Let's look at the one. So here, I'm going to use my Elliott wave, right? Here's 0, here's 1, here's 2, here's 3, here's 4. And guess what? It didn't finish it. It broke out of that trend. So this is not valid. You guys see that? But now in this case, where we're looking at this trade here, we now know that the Elliott wave is still not valid. So now here, this is why you guys want to learn how to use this, because in the end, maybe we're doing it backwards. Maybe we're saying to ourselves, all right, if the market is on a downtrend, right? And if we're looking at the diagram here, on a downtrend, 1, 3, and 5 are at the bottom. You understand? So 1, 3, and 5, we want to look for 3 and 5 to be the best entries to attack on a buy when the market retraces. So if we're looking at the opportunity that the market is presenting us, maybe this is the way we can attack it. You guys seeing this?
Yeah.
So now if I look at my channel here, I can confirm that simply by looking for the opportunity when the market touched this trend first. And now I have a good entry. So if I bought at 3 and 5, right, I now have an opportunity to attack the trade going up. You see this? Yes. Not you. So we all looking at the situation in a downtrend. Now let's look at it on an uptrend. So here, 0, 1, 2, 3, 4, 5. Let's say 5 is here. It's a little exaggerated, but if we look for our trend, right, and we look for the channel to complete it, we all notice, I don't think that's a good number 5 area. Let's say this is 5 because it has to be on the trend line. We all can see right away that the market is going there. And if we were looking to sell this trade, 3 and 5 were our best trade options. But honestly, I didn't want to enter on number 3 because of this. Look at this strong push here. You guys see this? But remember, if number 3 is representing as the strongest push, we want to look for a valid one. So here in this case, it's not valid because of the fact that number 3 was not the strongest push in that case. 2 was, and we don't want number 2 to be the strongest push. We want number 3 to be the strongest push no matter in which direction. So here, we're going to go ahead. Let me see, there's people. Do you understand? Now I'm showing you guys when plotting it that at times it may look like it, but in the end, you want to make sure that you're doing it right, because, you know, if you get this wrong and you entered the trade on a sell here, now you got to ride all of this up, and that's all negative. That's all money that's being placed, taken away from your account. And if you over risk your account, say goodbye to your account. You guys are with me? So that's why I want you guys to understand the importance of applying this. So let's go ahead and find a valid area where we can attack this. So here I'm seeing a clear uptrend. and I can confirm its channel. So if I enter here, 0, 1, 2, this would be 3, this would be 4, and this would be 5. Can we all see this? You guys with me?
Yep.
Yeah, mate.
Yo.
Good boy.
Yeah.
Now what we know is
All right, perfect. So here in this case, if we were on this uptrend and we saw this opportunity, here in this case, we're looking for buys. Now, if we go ahead and flip it around, we now see clear logic within the market exactly how we want to. 1, 3, and 5 being our sell entries, and 2 and 4 being our buy entry. If we wanted to attack this in the short term, we now know that I can buy up here when market hits what? Resistance. We're going to sell. And when the market hits support, that's where we buy. So as you guys can understand, each wave has its own fluctuation. Now, is anyone confused? Anyone having a hard time understanding this? Can we all understand the logic behind it? And using this moving forward, understanding the right way and avoiding the wrong way so we don't enter a trade wrong.
Yeah, right.
Totally understand it.
All right, perfect. So let's say we were wanting to trade this, right? We were wanting to trade it. Obviously, the importance is to spot the channel, right? The channel within the market, looking for the overall trend that the market is going in. And I say to myself, all right, I predict that this trade, since it's going down, I predict that this trade is actually, going down. I'm looking for an opportunity to either buy or sell this, right? If I'm using this, right? Let's say I'm gonna apply everything I've learned. So the Fibonacci. I'm looking for the Fibonacci's here, right? So here, in this case, I now know that in the past, this area that the market bounced off of is a strong support. So if I start drawing out my lines here, and I start tying in everything that we've learned so far, we can say to ourselves a few things. All right, so I know where support and resistance is. I know where the key areas of retracement based off of my Fibonacci is, right? And if it helps you better understand, you can draw a Fibonacci from the bottom up. And we can now see here that in the end, within these zones, there is also, other areas where the market would respect it. So I can say to myself here, all right, if I'm trading this, right, and I'm trying to predict, because that's what the Elliott wave is going to help us do, predict the motion of the market. I can say to myself, all right, so here's one touch, here's two touches, let's say this is the third touch. It failed to make the fourth touch, and what did it wind up doing? It broke out and continued going down. So no longer can we use the Elliott wave in this sequence. Now, maybe in the smaller time frames, we can use the Elliott sequence here. You understand? And if we look at it, I can say to myself, all right, if I wanted to buy this, I now can confirm it because look, the fifth point is on my support. which it failed to create a higher high point, and it was no longer valid. So now I'm looking at the opportunity where if I'm using my basic technical analysis like I've been teaching you guys, I can understand where all the areas of retracements are within this retracement of the bounce up here. I can understand how to attack it in a way. So in that case, I can either draw my lines or draw another figure from the breakout to the retest. And now I would look for ways to use my Elliott wave to better plant my entries. So in this case, I can't use it on this chart, so let's go ahead on a smaller time frame and look for an opportunity to place some entries here. So here, I noticed that the market is in a descending channel, right? Right here. Market's in a descending channel, and let's see if our Elliott wave is valid here. 1, 2, 3, 4, 5. So if it would have entered here and came back down here, this would have been our logical area. But guess what happens? How many times did it touch here? It touched 1, 2, 3. 3 times on the larger time frames. If we continue going down like we were looking at, we would notice what? That the market touched it actually more than 3 times. It broke out, came back to retest it, right? And in this case, that just means that either my trend line is off, or in that case, I'm looking for a better opportunity to trade this trade. So in this case, if I'm looking at the trade overall, I want you guys to understand one thing. Here, we learned one thing here. When the market touches the trend 3 times, it confirms it, right? Look for an opportunity here to sell or buy this. It could not create a higher low point. It actually broke out, retested, and continued going up. Now I know that eventually, if the market at some point retraces, worst case scenario, if I'm looking to sell, as my Fibonacci shows me here, that an area to take profit would be around here. So using the Elliott wave, I'm able to understand, the possibility. So I predicted that the market was going to do this, right? I predicted that the market was going to do this, but it failed it, right? So let's say this was my prediction. It failed it, and it failed to break what? The support area. When the market failed to break this, now I know that this Elliott wave and my prediction is no longer valid. I now need to change my approach towards this trade and look to buy this if I was selling originally. You understand? Or if I was holding a trade, maybe it's time to close my trade and now look for an opportunity to buy this. Is everybody understanding me?
Yeah.
Did I confuse anyone? No one's confused? I just want to make sure everyone understands why I'm using the Elliott wave. It's to help me predict. You guys are understanding that, right? I'm looking for ways to, as the market is developing itself, to use this tool to predict my possibilities of my entries, along with all the things that I've learned, right? So in this case, that's where we start looking for what's called the corrective waves. And if you notice here, there's different ways to detect the corrective waves. It can be on a flat surface, like I told you guys. It can be on a triangle. It can be on a wedge, or it can be on a zigzag, like we were originally looking for. So in this case, if we were looking for the market to develop itself, using both the Elliott wave, I now know that my possibility within the market is here, within here. This would be my best entry, and this is also where I expect correction, not only based off of the Fibonacci we drew, right? But using this Elliott wave corrective impulse now, I now know that if in this case, right, let's say none of these candles existed, and this is where the market started to retrace and start forming this uptrend, and we now have from 0 to A, right? I can go back, draw my trend, and kind of predict what the market can do and attack it that way, not only long term, but short term. How does that make sense to everybody?
Yeah, bro. Makes sense.
Yep.
So let's look at another chart. NZD USD. So here in this case, I automatically spot the market. You know, we're gonna start up the market. I already spot that the market is going up.
Yep.
So on an ascending trend. Right? So I can say to myself, all right, if the market happens to correct itself here, right, based off of these candles here, if I look at the smaller time frames and start trying to come up with a plan to attack this, if I use my fibs or my Elliott wave, right, I can say to myself, all right, guys, here I'm going to look to either buy this trade or sell this trade, right? So here I'm looking for this. And now, if I use my impulse, I know that this can be the possibility of the trade. It can either be here, it can be there, but this is where I'm guessing because I'm going off of this trend that it seems to be forming. Now, not only do I have possible entries to attack this, in the end, if you draw your support and resistance areas, you'll notice that 9 out of 10 times, it'll kind of respect this same support or resistance area. So here, if I was selling at 2 and 4 here, right, I'll now know, all right, guys, overall, the market seems to be forming a pattern we all know, right? Head and shoulders. So if I use this, this is just a tool to help you understand in general my possibilities and also kind of give you that idea like, all right, so if the market did this in this one, when it corrects itself, this is what it can do, and this can be my plan of action. So if I'm going ahead and debating within every area or every situation, I can say to myself, all right, now I have an idea. Let me move on forward to the smaller time frames and defend this plan of action. So here I can say to myself, all right, I can understand what the market was doing on the smaller time frame, and I can start looking for situations where the market repeats itself and kind of attack it that way. So here's the same patterns. Here's the same patterns. Look, same exact pattern. Same exact pattern. Yeah, I'm gonna use the rectangles better. Same pattern here, same pattern here, same pattern here, same pattern here. Now I can confirm not only my points that I was looking at, but now I know, all right, the pattern that it did here, as long as it doesn't break out and retest, I now know that the possibility is gonna go down. You guys are understanding like the logic behind this?
Yes, right.
Defending your predictions, right? Because that's what we want to become good at. That's how we'll become successful. Becoming a better trader requires you to predict exactly what you want the market to do based off of the information she's giving you. So, you know, as we start tying everything in, you know, you guys will start understanding the basics that at the end, I'm just simply looking for as much confirmation in the markets so I can attack it the right way. So in the end, I can catch the most pips, which in the end will pay me the most money. You guys are with me? You guys are confused? Any questions? Please. I want you guys all on the same page. I want you guys understanding everything here. So like that, you guys, as you guys start slowly applying everything, start all being on the same page. So when we start trading together, we can all go ahead and do this. How often do I use these waves? I'm a bit confused. All right, but Robbie, I use this when I need a sense of direction in terms of, you know, like my prediction. I'll use it. You know, if I'm not finding the right opportunities using the basics of, you know, simply looking for like how I teach you guys. You know, I can trade for days just going off of support and resistance. You know, if I look at support and resistance on the smaller time frames based off of the larger time frame ones I drew out, I can say to myself, all right, guys, here, I now know that this is a support area, right? That can be a possible area for me to attack. I know that this is a support area. I can see that the market is attacking it. And if this is complex for me, I'm just giving you guys the tools to, you know, figure out what's, hold on. I'm still confused. It's a lot of information. That's fine. You know, that's why I want to go over it and I want to answer any questions because I want you guys to understand that all it is just a simple, it's a tool to help you understand what the market is doing. You understand? If you guys are looking for the opportunity, you know, and this whole drawing your line, you know, your support and resistance is confusing to you. Maybe, you know, you remembering 1, 2, 3, 4, and 5 is much easier for you to understand within the channel. So remember, within the channel, if I see a descending channel, right, and I want to know that the amount is touched the channel to kind of determine if it's going to break it or not, I can use this. I can use the 1, 2, 3, 4, and 5. Let's see. Does that help you? Does that help you understand it, Helena?
Yes, thank you.
Perfect. All right, Bassett. So with the A, B, C, and D, all that's just teaching you is in terms of the correction of the previous waves that we were looking for, which was the 1, 2, 3, 4, and 5. Does that help you understand that? It's just a correction of the breakout of the trend.
Yeah, I get it now. I see. Thank you.
All right. So if I was looking at this channel here, right, and I was using the one, you know, the impulse waves, I now know that, you know, this is where I can attack it. And if it breaks out, then this is how I can kind of predict it. This is how I can go ahead and understand it. But it's just, at the end of the day, all these tools are just basically teaching you exactly what we've learned in the first day of class. If you use your support and resistance, you know, and spot them, you're gonna find out that, you know, in the end, the market eventually respects that area. So if this takes too much time for you, you know, these are all different tools that can help you speed up your process of analyzing a trade and also help you come up with a me, you know, you guys ask me, you know, how often do I use this? I've gotten to a point where I can count those same numbers and simply just trade based off of, like I said, using my arrows, you know, and based off of the break-in and breakout of each support and resistance. If I go ahead and draw a trend here, right, based off of this trend, I can already see this is 0, this is 1, this is 2, this is 3, this is 4, this is 5. If it breaks out of here, right? I now know that 5 is my entry to buy, right? And this is where I would want to attack it. So if I'm gonna go, that is 0, this is 1, or another case, if this is the correction of this trend being broken or this channel being broken, I now know that this is 0, this is A, this is B, and this is C, and this is D. And then, and you can continue like that. It's just, it's a lot more complex, but the reason I'm teaching it to you guys is, so if the numbers and the letters help you understand it, at the end, you understand that this is just a way to help you predict the market's motion.
That makes it so much easier, like a lot easier.
Yeah, but I just, I do not want to not teach you certain things because different people operate differently. Like some people can understand by the number of touches. Some people can understand by the letters and the numbers. Some people are more visual, so the numbers and the letters help them out. And yes, for Elliott wave to be valid, you want the 5 touches. And the 5 touches usually consist of either 3 in the top and the bottom, right? And that would usually signify, remember, if the market is going for the 4th touch, usually that means that the market is going to break out. Now, sometimes the market touch, right? And because the market, this support line was strong enough and it couldn't break out of it, it would come back here and break. And then what would happen? The market would come back to retest, and then it would continue in that trend. You guys are seeing what I'm saying?
Yep.
Yeah.
So I'm just teaching you guys this. So like that, in the end, whatever type of trader you are, you have the tools that better fit your understanding levels. Me, I like to keep it simple. It's very simple. When I trade, I follow a freaking a methodology that I've learned, and it was basically this. I think of this, and I keep it stupid, simple.
Keep it simple, stupid, not the other way around.
Yeah, keep it simple, stupid. Sorry. Keep it stupid, simple. That's how I think about it. Even though it's kind of like there's some fucked up grammar there, but that's what helps me understand it, because at the end of the day, I don't want to complex myself where I'm giving myself a headache just to make some money. For that I go work a job. I'm trying to tell you guys and set you guys up so like that in the end, if I'm looking for an opportunity to trade, I now know that the market, we all understand by this point, the market is made up by different channels and trends, right? You guys all understand that already, right?
Yep.
And that's what the market does. At the end of the day, it will continue forming trends and channels, and the market tends to respect them all the time. James, did I answer your question? Did I confuse you?
No, that answered it. Thanks, mate.
Perfect.
Yeah.
So, and then like I told you guys, in the end, you can even extend your trends and channels, and then see that, eventually within this trend that the market was going down, it still respected this trend that it was on over here. You see this? And it's just, I want you guys to understand the difference in everything. So like that, you guys become the best trader to your ability. Now, how many of you guys feel it's more simple by using your lines than trying to use the Elliott wave?
Or sort of hard. Yeah, bit of a combination of both, I think.
Yeah, for me, using both works really well.
Yeah, because remember, it's just, let's say you were looking to buy this trade, right? And you guys say, all right, I know it's at the support area, I know that the market touched this line 3 times, and I know that the market touched it 4 times and it failed to break out, right? So if I use the Elliott wave, would this be my 5th point? Would this be a good entry? Or if I just simply draw up my lines, am I looking at a strong support area where price can eventually come back down and break? Or am I looking at this? These are all questions you guys ask yourself. And then sometimes the emotion kicks in and you say to yourself, shit, man, I don't want to miss this trade. It looks like a really good buy. When you enter the buy, remember the worst thing you want to do is enter a buy, and then now you're holding it in negative, and then it continues going in the opposite direction because you were impatient enough to realize that it's looking for that support to bounce back up. So now you close your trade, you're negative, and then now you try to sell it, and then the price reverses, and now you're negative again. You lose out, and then now you lost 2 trades simply because your emotions and your patience wasn't there. So these are all tools that are going to help you better predict everything. So in the end, you guys are successful. You guys are with me?
Yep.
Yeah.
That's right.
Perfect. So any questions, any concerns? Please, I want you guys to feel confident leaving today's lesson that you guys understand this. Talk to me, Helena. What questions you may have?
I'm good. I'm just going between trying to be on this and at work at the same time.
All right, perfect.
I'll reach out if I need assistance. Thanks.
All right, so yeah, Roberta, let's talk tomorrow. I want you to really catch up with the past webinars, because all the information in the previous webinars is going to really answer all your questions, honestly. Understand from the very basic of how we went to, how each candle opens up, to what develop, to how they form. I want you to really understand all of this, because it's very important to tie everything together. I keep using this example, but it's very important you guys understand this example because of the fact that, it's really what trading is like. It's like being in a war. And you don't want to walk around and enter trades and enter areas in the war where you can't protect yourself, or you have no idea, or, no way to understand what can I do to protect myself if I'm in a fucked up situation. What can I do to avoid, maybe if I target this area better, I can be way better successful. And guess what? All of that, being on time, being correct with your analysis, being, confident with your trade. Not only can you enter with a little bit more risk, but you can also, understand every possibility and attack it to that way. I want you guys to really understand that and grab that. It's very important for you guys to put all this shit together like that. If I know that I can enter a trade for 15 minutes, make a few dollars, build my account up more, while long term I'm holding a trade, then that's the goal. I want you guys to really, really grasp that, because in the end, that's the only way you guys are going to be able to do this full time. Now, a lot of the shit I taught you guys can be complex. You can keep it simple. You can, keep it to the point where you're able to really understand everything. But in the end, the whole game is to just make sure that you know what the market is doing, make sure you know where the market is going, and in the end, I'm ready to attack it. So why don't we take advantage, since we got all these people on the charts with us, since we kind of understand this, why don't we all look at some trades together and take advantage of the next half an hour and see if we
can...
yeah. Hey, Jose, I just had one quick question, please.
Talk to me, man. What's up, Daniel?
Hey, bro. How's it going? Hey, just been catching up on webinars and whatnot, and I understand the support and resistance lines a lot more than I did before. But I was just wondering how you, when you're drawing your support and resistance lines, what are you actually looking for? You know, in the way that you actually draw them, because it seems, you know, obviously you're going for the high highs and the low highs or high lows. Sorry. But
Yeah, so
what? How?
I like looking at previous areas in the past. So to help you understand that, you know, I look for where the can to respect an area, you know,
Yeah. Where
consistent.
there's a lot of movement, a lot of like lateral movement.
Yeah, so here I'm going off of these candles here. You
Yeah.
see here? So I can
Yeah.
instantly see. I've trained my eyes to spot them from a mile away
Sure.
because
Yeah,
I've
that's
done it
that's
so many times.
yeah, that's what I was wondering, because you seem to be like right on point, but I was just wondering how you got to that point.
Yeah, so
Is it?
I like using the support and resistance of the wick, and then, you know, because in the smaller time frames, if I draw them on the body, you know, on the smaller time frames, I would get that. On the larger time frames, I like doing it on the wick because I know that's my worst case scenario.
Yeah. Okay. Yeah.
So
And you do that for the resistance as well. You go to the top of the wick.
100%. So now I don't even look at it. So let's say I'm looking here, I can already understand. Look, how many times do these candles respect this line if I were to draw a resistance line right here? So I can see maybe I'm a little bit off. So, you know, I'll just drag it a bit. But then in the end, I'll go here and I'll look at it. Look, every time price came back by this area, it would either retrace it or retrace it or break it. And eventually come back in and retrace it. Come back in, retrace it.
I guess that's the same with the descending or ascending trends as well.
Remember, these support and resistances, be it horizontal, diagonal, it doesn't matter. You don't want to force it to fit. You know what I'm saying?
Yeah.
That's where you're going to fuck up. But here, you know, on this, we can see already, look, there was a descending triangle here, right? It broke out of it. It broke out of it. And what did it do? It came back into the zone and retested it. So if it either breaks back out of it, that means that the support is broken and we would like to see the retest to continue going down. Or based off of this double bottom here, if it retests here, this may be actually a good buy area. You understand? So if I'm trading this, I can understand that if she retraces, then and the next candle opens up above, this may be a good buy area here. So if I go down to the smaller time frame, since that's where I place my entries at, this is what I'm looking for. You understand?
Yep.
So let's look at the 1 minute chart. Here, it's retesting it. So if in the next few minutes, this candle continues going up, right? And if we're looking at an uptrend here, and we're looking at an ascending channel here, right? We want to see what? A higher high point within this channel, or we want to see the breakout and it continue respecting. You with me?
Yep. And how do you, obviously the next resistance line is obviously the one above. How do you know when to cut your profits or whatever you would call it?
That's just based off of like, so here, if the market breaks out of here, right? And retests. And what does it mean? When the market breaks out of a resistance, right?
Yeah.
It retests, then usually that means if it breaks back in, that means that it was invalid, that breakout. We have a fake out. Remember from the last lesson there?
Oh, I haven't actually watched that one yet. I've just watched the first one.
Yeah, it's very important you watch it. So, you know, if we tie everything we've learned together, right? So basic. I didn't teach, let's say you don't understand a breakout and a fake out yet. Well, now I know here, like, look, I have a possible head and shoulders. So if it breaks out of this resistance area here and it retests, then now I know that eventually she's still going up. You understand?
Yeah.
If I see that the market is going down, right, I'm going to look for what? An opportunity to look for a downtrend, confirm it. Now I know that I have 1, 2, 3, 4, 5, 6, 7, 8, 9. Now, since I drew a downtrend along with this uptrend that it's here, we have a what? A symmetrical triangle. You understand the difference between symmetrical, descending, ascending triangles already as well, right?
No, I haven't fully. I've got the idea of it, but haven't really.
All right. So yeah. So just
I'm still got a bit of catching up to do.
don't worry about it, man. There's no rush. You know, all this information is available. I know you have access to the course. It's all on the course.
Yeah.
You know, and I want you to understand that there's really no rush to it. You know, you have full control of what and when you get what you want. You understand?
Yeah, awesome.
But in the end, as you will start learning in the previous lessons, is along each trend and channel, the market's always making certain formations. So if I'm looking at the market here, I see an ascending triangle here. If it breaks out and retests, that means I'm looking for the market to go up. You know, if it breaks down and it retests, I'm looking for the market to go down. Now, to go over in the past with what I taught you guys was when the market breaks out of the resistance and it comes back in, right, and it fails to retest and continue going up or creating that higher high point that we were learning when spotting trends and channels, right? We know that that is the difference between a breakout and a fake out. A fake out is when the market fakes out of the resistance area and breaks back in. A breakout is when the market breaks out, retests, and continues.
Yeah, okay.
Right? How's everyone feeling today? Everyone's on par with us?
Yep.
Yep. Yeah.
Yeah, right.
Perfect. So let's look at some trades. What can we trade? Anyone have any pairs they want me to look at?
Yep, EU.
Who said it?
Emmy.
Emmy, you want me to look at EU? All right. All right, so here, first step, obviously, always, is to look at the larger time frames, right? Based off of the information that I just shared with you guys, right? Simply look at this right here. We noticed two things, right? The market was ranging here, right? Or in other cases, it was accumulating. It broke out the resistance, retested it, and came back and shot up. You see it?
Yeah.
So here in this case, if I look in the past, I know that there was a support area around here. So that's what we're looking at here. The same exact thing that happened in this area seems to be happening here. So now I know that the market is overall going in a uptrend, right? Let's look at the smaller time frames within the high time frames, and we see the weekly. And I say to myself, all right, so EU is starting to shoot up. I can say to myself here, this is where we apply our Elliott waves with what we just learned. So here's the first one, here's the second one. So if the market does repeat the failure here, right, I can say to myself, I know that worst case scenario, if this continues to go up, my areas to want to buy this trade would be here and here. You guys seen already how I'm predicting this?
Yep.
So I'm already looking at this. So maybe if I don't like using the Elliott waves, I can understand it's basic knowledge, right? That the market is gonna do this. It's gonna range within this channel. And that, you know, if I want to buy, obviously I'm gonna buy at support. And if I want to sell, I'm gonna sell at resistance. So I'm looking here and I draw my support area and resistance. I can already know based off of this that if this happens, this is what I want to see. If I continue drawing out my support and resistance areas, I can understand my two plans if anything fails. That's why I always tell you guys, you're never too early or you're never too late. So count here. Look, 1, 2, 3, right? Here we have 1, 2, 3, 4. On the fourth one, it broke out, retested, broke out, came back to retest it. What happened? Now we have a plan coming down. But here in this case, if the market continues respecting this, we at least know that if she comes in, right, this would be my area to buy, and this is where I would ride it. And if I use my support and resistance area, right, then I'll know my areas that I can either consider as a take profit or area that I would like to re-enter this trade. You guys are seeing how you guys are looking at this?
Yep.
Yeah.
I did all of this based off of the larger time frame. Go down to smaller time frames. Now we're gonna go ahead and look for confirmation. Here we're gonna look for reversals. Here we're on the daily, same thing. It's doing the same exact thing. Look, and what do we have here? We have a double top. So if it comes down and it confirms this breakout here, breaks out, then we know that the retest will be here, right? And if it breaks out and retests here, then that's what we want to see. So here we start looking at everything. We start saying, I already have all these areas put in my mind. Start looking at what's going on. Do any of you guys spot any areas of like reversals or anything?
Is there a upside down head and shoulders forming right now?
It can be. It has to finish this. It has to finish this. So what does that mean? It has to respect this support area here.
Yep.
And then on top of that, it has to respect this trend. You guys are seeing this? So here, I already can start developing an idea how to attack this. Now let's look at when the market forms something similar to that. And kind of make a judgment off of this. So the market rose, formed an inverted head and shoulders. I can already see it here. Right? Came back down for the correction of this uptrend, came back, corrected it, formed a double bottom, started shooting up. Here's the support area, the resistance area. Here's the resistance area. We see the retracement, kept doing it, kept respecting it, kept repeating the same few steps. You guys see that? Same few steps, look. Same few steps. And now I know if I'm writing this trade down, long term, this would likely be my trade, long term. And while I'm holding this sell long term, if it breaks out of here, now I know what? Long term, we're looking for this. And yada, yada, yada. You guys are with me? So
Yep.
Yep.
I still
Yep.
have not entered this trade. I'm just looking at all the possibilities. So I'm not, when I enter this trade and it starts retracing on me, I'm not panicking and closing my trade and then trying to sell it and then closing that trade. And then now I either blew my account or, you know, I just lost more than I should have if I would have just been patient. This is exactly how I look at the markets. You understand? This is why most of the times I'm ending up on the winning trade because I know the long-term picture and I also understand in terms of where I'm going with this trade. I know that these are my areas that I got to be real careful with. So I understand that when the market reaches these areas, I can prepare myself to take minimal loss, then holding this trade, getting married to it, hoping she returns, and she never comes returning anytime soon. Now, unless you got enough power in your account and you weren't over leveraging, you can eventually hold this trade, trade the opposite direction until she starts coming down and you start piling up trades, and eventually you can close that trade positive. But that all just comes with experience of not overreacting to the trade. You guys are with me?
Yeah.
So how do you feel about AU?
Yeah, mate.
I mean EU.
Good. I'm short of it at the moment, so
I'd actually be careful. I'd be honest with you now, and I'll share with you. I'm expecting this to go up.
yeah.
I'm expecting this to go up. Now, yeah, she can come back down to 22, but overall, if we go back to using our Elliots,
I'm just targeting 123.
123 is a very nice area.
It's a fib off, not a fib. I think it's a support area off the monthly.
Yeah, man. I think overall she's still gonna go up because in the end, when we look at it, she's respecting this trend line here, right? And if she does eventually come down, there's a lot of areas she has to break down to continue going down. Now, yeah, on you know, with an account like yourself, you know, on like we agreed to it, right? We agreed to it, nothing more than 50 cents, right?
50 cents? I thought you said 50K.
No, 50 cents. 50 cents. No more higher lot sizes than 50 cents until you are confident enough to move on to 75 cents. Remember we said that?
That's a 0.5, eh?
0.5, yeah.
Yeah. No, 3 days I'm doing this. Yeah.
Yeah, so remember, the whole point is for you to have confidence because, you know, once you have enough confidence, you really don't need to catch that many pips on a $2-3 lot that you're stressing yourself out on a 0.10, on a 0.1, 0.2, 0.05. You understand?
Yeah.
When you have enough capital in your account, you really don't have to be there you don't really have to hold a trade, you know, for too long. You can spot trades perfectly, hold them long term, and meanwhile scalp in and out or intraday trade or day trade, you know, these trades and still be successful, dude. You know what I'm saying? Yeah. Imagine holding a trade from here to here with a $2 lot. You know, on a $2 lot, you make $8,000 within this time frame of, you know, from here to here. But then in the end, you know, as you're making this $8,000, you're making $2,000-$3,000 on each time it goes up and down, up and down, up and down. By the time you close out this $8,000, you're probably up $10,000-$15,000 on that trade.
Yeah.
You understand? So I like for you guys to really work on your confidence because, see, at the end of the day, a lot of people are going to teach you what I'm teaching you, but a lot of them don't focus and emphasize the confidence, the emotions, the skill set as much as I am, because a lot of people, if anything, people sell you more on their results. You're buying into their results and you're not buying into their mindset. You understand? And you're focusing more on their results than your mindset. That's why I'm kind of doing things reverse. I want you guys to develop a confidence level, a mindset, and structure within yourself. So no matter if I lose, I know I'm confident enough, I can get it back. You understand? So here we're looking at EU. I mean,
Sweet,
I've
man.
already looked at this chart. I like to see her come back into the zone and then retest to break out. If this is the retest of this fake out within the support line here, and that's also good news. You know, personally, I like to buy this trade long term. I'm just not ready to enter it right now because of the strong push down.
Yeah,
You know,
and that's what I'm in now. So I'm pretty close to hitting
if you want
close.
to
Just
enter this trade on, if you want to enter this trade on a buy, and you know, just enter at a very small risk. I'll put a 0.0, depending on your account balance. You know, start off with a 0.01, 0.02, 0.03. Don't put nothing more than that. If you guys have less than $1,000, don't put more than a 0.05 in this trade. You know, I want you guys being confident that if you do enter this trade, you know, you're good. And then, you know, as the market starts retracing, you know, we start seeing. So if the market comes back up here and retraces, then we enter here on the higher level, as long as we don't see that she fakes out. We want to see the confirmation. So, you know, and you can literally start stacking up trades. As the market starts doing this, you start stacking them up. And next thing you know, as opposed to entering with one high lot size with the risk of if she goes around, I now am stacking up my trade entries, giving me, in the end, the same opportunity to make money as I was looking for trying to enter on a huge lot size with no confidence. You understand? Let's look at AUD USD. This is a trade I'm looking at. I'm selling this. I've been personally selling this, and I'll explain to you guys why. You know, cutting down all the way to the 4-hour chart. You know, here, price formed it can either be a descending or what most of you guys know, a wedge. And it's also in a descending trend. So I'm selling this because in the end, on this 4-hour chart, from here to here, it's good money to make with the right lot size. On a 10-cent lot size, it's like $100 if you catch it from this resistance to support. Like a little less than $100. You know, I got sales over here right on the resistance, right on the money, because I spotted this resistance area here, and every time it hit it, it respected it. So that's when I entered my sell. When the price retraced, I kept entering sales, kept stacking up, and I'm still holding this trade. That's one trade. You guys feel free to make your own analysis too and call out anything you guys want me to look at.
Hey, JL.
Yeah, what's up, man?
Hey, man, do you ever set sell limits?
I don't like using sell limits because I like trading at market price. I like, you know, I understand price points, and you know, as you guys become more experienced, you'll remember these price areas. You know, me, yeah. I kind of look at the same trades and trade them because I trade them long term. You know, if I'm looking at the monthly, I know the game plan for the next 6 months, possibly. If I'm looking at the same trade for 6 months, you know, I start remembering support and resistance areas. That's why in my charts, if you guys ever look at my charts, I really don't draw out so many lines. You know, I can remember. I can actually spot a support and resistance without ever putting one down. You know, and trade off of it. Now, if I ever get lost, I would lay down my support and resistance, or use different fundamental technical tools to help me, you know, kind of gather myself again. You know, I am human. You know, I'm not a robot that fucking pumps out money, but you know, sometimes whenever I find myself in a rut or whatever, I go back to the basics. Let's look at some crypto. Let's look at Ripple. So for some of you guys that I literally caught this explosion up. That whole trade I caught, and every time she retraced, I stacked more entries. From here to here, I made about I think it was like close to like $8,000 I made off of this. And going down here, this is when we started attacking it. And we literally held this all the way down to 16.
Hey, what triggered your take profit on that trade then, JL?
I realized on this trade when I was buying it, as I was buying it, I had one position that I held at 20 cents. And I kept trading in and out, in and out, in and out, in and out to make my money. But I winded up overall holding this trade on a 0.03. On a 0.03, listen to what I'm saying. On a 0.03, trading this as Forex, I held this trade all the way till $3.15. Right here, where price failed to continue going up, and she retraced that resistance area. So when she broke out and came back in and retraced it, and I saw that the market started going down, that's when I closed out my trade.
Okay, cool. Yeah.
Same concept. That's what I want you guys to understand. Crypto has its different flows, but in the end, if you look at the chart, when you're looking at the charts and you use the same Forex, we can see here, what's the market doing? It formed the head and shoulders. It was going in a downtrend. Right? Beneath this head and shoulders that it formed, right? We can start seeing what? The market was forming its own head and shoulders here within this downtrend. You see? Broke out. Now what did it do? Started forming an uptrend, right? What did it do? Formed a descending triangle. Failed to break out and create new highs, so it started going down. And you can literally trade this the same way. Failed to continue going higher, so it came back down. The same support areas, resistance area is still the same. You understand? Check out this. Look at the same support area here. It's still the resistance area here. So every time it reaches it, it bounces up. So in the end, if you guys master this skill, I'm not guaranteeing you success, but you're putting yourself in a pretty damn good position to understand whichever market. Let's look at the stock market. Apple. Right? Apple, in the end, what did it do here? If we're going basically off of technical analysis, right? That's clear as day. That's a double bottom right there. Double bottom on a descending trend, right? 1, 2, 3. On the fourth touch, it gapped, retested it, kept shooting up. So it's like, if I teach you guys the technicals, you literally can trade any market you want. Look, here's your support. Here's your resistance here. That's your support up there. Here's your resistance here. You understand? Now, the thing with the stock market is it gaps a lot because of the fact that the market's closed from 9 to 5 U.S. time here in New York, right? Monday through Friday. But if you look at it, in the end, price always respects these areas, guys. That's what I'm trying to tell you. So when you become a better trader and understand all aspects of the market and you master the technicals, you can literally become successful at this. Let me show you guys something that even mind blows some people. Here's your Fibonacci. We draw out our lines. Right? There's a lot of gapping in the markets. But in the end, if we go back to the basics, right? 61.8, major retracement area. What happens? Price hits it, it breaks out, comes back in, retraces here. Fails to continue going lower because it couldn't break out of this support area, right? Which was this resistance area here for this uptrend. Here we're looking at it. What did the market do? Form a descending triangle. It broke out of the triangle. What did it do? Go up. If we want to continue being, you know, technical, be a resistance and support there. Look at another one here. So it's like, you're telling me that with this technical analysis that we're applying to Forex, we can not only do it on crypto, we can do it on the stock market, we can also do it in the Forex market. You guys are with me? So that's why I'm trying to get you guys to practice the basics, because I swear to God, you know, I literally trade the stock market like if it was Forex. When I hear news, if I'm trading Apple, you know, if I'm buying any blue chip stocks or even basic stocks, I look at the chart and I say, damn, this looks just like what I would see in Forex. If I want to look at the smaller time frames, let's go ahead and look at it. It's the same thing, guys. You know, that's why I want you guys to really understand the importance about it. Here's the price accumulating, right? Price broke out of the resistance, came back, tested it, retested. What did it do? It gapped. Even though price came back up, it came back to retest, fill in that gap. What did it do? Shot up. You understand? So imagine I would have taken a few dollars. I would have bought price here because we buy our support, right? We buy our support. And I now know, shit, I bought here. If I overheld this for this amount of time, right? If I look at my resistance area, worst case scenario, if I overheld this trade and I see that price is accumulating here, guys, let me get out of this stock. I'm still in profit. Boom. You know, and then look what price does. And then, you know, days and months go by and what happens? Price starts going up. Yeah, have a good one, Jono. It's great to have you guys on board. But, you know, I want you guys to really put all this together. Yeah, definitely. I'm going to upload it right now. I'm almost done as well. But, you know, overall, as you guys can see here, this is what we're looking at. You know, basic fundamentals of technical analysis can get you far in any other markets. Now, obviously, each market has its own flow. That's why I want you guys to understand. So for everyone in here, you guys have any questions, any concerns? Did you guys learn anything new today? I want you guys to let it all out. Let me know what's up. If not, so I mean, I'm gonna end tonight's webinar. I appreciate everyone who came on, and I'm uploading this recording tonight, and I'll be seeing you guys in the next class.
Thanks so much, Jose.
Thank you.
Thank you, Jose.
You guys all have a great
buddy.
evening.
Thanks, Joe.
Cheers, Jose. Thank you, mate.
Cheers, everyone. God bless everyone.
Yeah.